In a related development, the national president of the Petroleum and Natural Gas Senior Staff Association of Nigeria, PENGASSAN, Festus Osifo, has revealed that the federal government has restored the subsidy on petrol, despite the official government policy of ending subsidy regime since May. President Bola Tinubu had announced the removal of fuel subsidy in his inaugural speech on May 29, leading to increase in fuel price from 197 naira to between 480 naira and 570 naira. The pump price was subsequently reviewed upward to 620 naira. But Osifo, who is also the president of the Trade Union Congress, TUC, said the government still pays subsidy on petrol due to the cost of crude oil in the international market and the exchange rate. He added that the government can stop subsidizing petroleum only when it manages the exchange rate effectively and pumps in supply to bring down the exchange rate. Interesting times. To discuss this, we are now joined by Kelvin, Emmanuel, an economist and CEO at Diary Hills. Good to have you on the news. There are conflicting reports here and there from the two we've just shared with you. While the NNPCL says the government has not reintroduced subsidy on petrol, some sectors are saying that is not the case. What exactly do you think is happening?
Well, to be honest with you, there are quite a number of people who want to desperately believe that petrol subsidy has been returned in order to form a narrative. Petrol subsidy has not been returned. Now, if you go back to the Petroleum Industry Act, sections 205, 206, and the annexes of sections 200 down, that talks about downstream for PMS, you'll find that NNPC is obligated naturally after the regulation to control only 30% of the market. Now, what you have is basically like under the direct sale, direct purchase agreements, where the NNPC was doing crude oil swap, they had forward contracts to companies who were delivering PMS in Nigeria, and they had debts. I think at the last count several months ago, the GC of NNPC had mentioned that they had debts of $2.8 billion US, even if I've repeatedly said that the president should call for an external audit of the NNPC, especially as regards reconciliation for direct sale, direct purchase agreement and remittance of crude oil receipts to the Federal Account Allocation Committee, because there has been dispute between the FAC and NNPC. You know, there are debts that they are paying, which is the reason why the GCOE mentioned that they are recovering their full costs. And those forwards are not supposed to end until November of 2023. Now, the reason why independent marketers are unable to bring in products is because a lot of them are unable to open LCs, letters of credit. You go back to the fact that of the $6.8 billion worth of FX forwards that are being owed by the Central Bank of Nigeria to banks for LCs that were opened and the CBN didn't have liquidity to pay, about $2.8 billion of that money are actually international commercial credit. So what you have is a situation whereby CBN is unable to redeem the forwards from February of 2023, and banks are unable to price LCs at fair value. They have to mark up. So many companies are priced out of the market because they're not able to afford the premium the banks charge to be able to open LCs for them. So they're not able to import. And even when they import, they end up importing at prices that are above the nominal exchange rates, and it affects the ability to compete in the market, which is the reason why the GCOE of NNPC had mentioned that that inability of independent marketers to compete is made them to boycott that principle in the PIA that says that NNPC should only control 30% of the market, and they have to fill the gap. So I don't see the hysteria about whether petrol subsidy is back or petrol subsidy is not back. I think it's just politics and this thing of trying to bring a narrative to say, oh, they removed subsidy and they brought subsidy back, the government is confused. I'm not holding brief for the Nigerian government. I'm apolitical. I don't belong to any political party. So my views are always on the side of economics. The reality of the matter on ground is that until the end of November of 2023, NNPC will not finish, according to them, paying for the forwards it owes for crude oil swaps that were done, or cargoes that were done as far back as 2022. And if they don't finish paying, they will not be able to remit fully all the money they get in crude oil receipts.
All right, Emmanuel, let me interject for the ordinary man who doesn't understand the technicalities, because I had to pay close attention to follow what you were saying. Is there any way the government is still subsidizing fuel as against the announcement that it has been removed? From all you've seen, to if you want to explain this to an ordinary person, is there any possibility that is actually the case?
When you import petrol into Nigeria, stock lasts for 60 to 90 days. Okay? An independent marketer cannot say, because there's a section in PIA, sections 206, subsections 2, I believe, that talks about transfer pricing. An independent marketer cannot say that, oh, because you imported petrol at 580 or 595 naira, and the dollar has moved or crude oil price has moved, is going to apply the new price on international markets, to the old stock that is currently on ground. It's called transfer pricing regulation by NMDPRA. NMDP frowns at it. It doesn't allow you to do transfer pricing until the old stock is depleted. You can't apply current market conditions to the old stock in the country. It's called transfer pricing. So the reality of the matter that NNPC has had to fill up the gap that is caused by the inability of independent marketers to bring in products because of commercial letters of credits that they cannot open with their banks. And on the other hand, you have stock of petrol that is in Nigeria that they can't do transfer pricing on because of the provisions of the PIA. And then thirdly and finally, you have a situation where NNPC is owing forwards for crude oil swaps that were done under PMS subsidy that has been removed. They've not finished paying those crude oil swaps. And because of that, they're having to deduct payments from the remittances they get, crude oil receipts, NLNG dividends, to reconcile those crude oil swaps until they finish paying those
still
swaps,
speaking from
fully. That was the accounting insert or accounting line that people saw on the balance sheet and interpreted to be, subsidy has returned.
Okay.
And it's
okay. However you look at it, it does seem like there is, from the layman's perspective, there is still something to do with subsidy in our fuel environment. The removal is said to, the intent was to improve the fiscal policy of government. Would you say that has happened?
Look,
would you say that,
let
me rephrase that, would you say that it has cost more pains than gains on the economy? I think that would be a fairer way to put it.
Listen, there are four metrics that determines the growth of the country. There is the government spending, there is the exports, you have consumer spending, and then you have investment. Consumer spending, there's been demand destruction because of the 312% increase in the price of PMS. Of course, there's demand destruction. In terms of investment, you have the fact that there is a crisis at the Central Bank of Nigeria, external reserves in Cumbad, and you have problems with your exchange rate because you don't have liquidity to provide it. Then there is FX-induced inflation. Okay. In terms of exports, you have challenges with the fact that there is crude oil theft, and that's affected the ability to export crude oil. Nigeria is not able to export gas because there's lack of infrastructure to export gas. Okay, but in terms of government spending, the removal of PMS subsidy has actually increased the amount of money available to the federating units. I think last month they shared about 1.1 trillion. That is substantial, significant increase. Now, on the issue of when these monies are shared, according to the formula that is created by the Revenue Mobilization and Fiscal Allocation Commission, 55, 29, 16. 55% to the federal government, 29% to states, 16% to local governments. The question you now have to ask is, number one, do the governors allow the 16% that goes to the LGAs to actually get the 774 local governments in Nigeria? You and I know what the answer to that question is. Number two, the monies that comes to the states, Do the governors actually use the monies for the purpose they are meant for? Are they providing conditional cash transfers and social safety net for their people? Number two. Number three, are they paying the minimum wage as stipulated under the 2019 Minimum Wage Act of 30,000 naira minimum? Are they paying it, or are they owing salaries? These are questions you have to ask.
I mean,
Yeah,
plenty
so
of
as much as
questions,
want
but
to focus on-
we had to give you time to speak a
Of
little, but we're really out of time for this part of the conversation. But it was important you explained some of the issues on the ground. Thank you very much, Kelvin, for speaking with us.
Thank you. Thanks for having me.